Rand, a bit of strength coming through, trading around 694 this morning. So it looks like the market really welcoming news that Ireland is set to accept some sort of bailout package and perhaps putting a bit more risk back on the table again.
Good morning, Stephen. Yes, you're right. The rand has strengthened, especially going into the weekend, and that can be, mainly because of the increased inflows that we are seeing in the equity market, which are being associated with the looser monetary policy here in South Africa. And the second thing is that the rand is also benefiting from the euro-dollar movement, where you're seeing the dollar also weakening versus the euro, and that's showing, as you said, the market is welcoming the rescue packet that has just been announced for Ireland.
Of course, we are still waiting for news on the size of that package. So until that, do you think the market will still be slightly on tenterhooks?
Yes, I mean, when it was announced yesterday afternoon, there were no details in terms of the size and the terms of the package, but it looks like the market now is just speculating in terms of that. And it looks, or what they said is that the more information will be published in the next few weeks, and that will be alongside Ireland's government budget plans as well, where we're expecting to see the government in Ireland also starting to increase things like tax rates, and also just in an effort to reduce the government deficit there.
Well, negative for commodity prices and for the rand on Friday. We had China raising its reserve requirements to banks by another 50 basis points, and just the latest move by China to try and cool down that economy and to curb inflation.
Yes, I mean, China has been increasing their reserve requirements ratio for a couple of banks now, and it seems like, this is just as one of those measures where they are continuing to try and cool down the economy there. So yes, of course, I mean, it's just one of those measures that China has been taking over the past few weeks or months.
Of course, we'll be taking a look at our own economy tomorrow. We're getting third quarter growth numbers out. What sorts of growth is Standard Bank looking for the third quarter?
Standard Bank is looking for GDP to be about 3.6% quarter on quarter, and that's above market expectation, where the consensus is expecting 3.3%. And for that, Standard Bank is expecting mainly favorable base effect, as well as sectors such as mining to come and to support GDP growth in the third quarter.
Of course, consumer inflation numbers coming out on Wednesday, and that follows, of course, last week's interest rate cut. Do you think that the inflation numbers are still going to be supportive of interest rates where they are at this stage in South Africa?
No, definitely, Stephen. We're expecting inflation to be at 3.3% in the month of October, which is in line with expectations. And it looks like inflation will still be really subdued in the next few months at around 3%. And that's mainly because of the strong rand. And with October as well being the low 7-month, we're not expecting any upside surprise out of inflation in October.
Anything on the global calendar of note this week, Tebogo?
Globally, we're expecting second estimates for US and for UK. And for UK, it looks like the market is not expecting any changes there. They're expecting growth to still remain at around 0.8% quarter on quarter. And for US, the market is expecting the third quarter GDP to be revised up to about 2.4% quarter on quarter from the initial estimate of 2% there.